We're going to take a look at DraftKings. So DraftKings had an amazing day today, up 14.5%, currently trading at $22.08, up $2.75 on the day. So here's what I really want to take a look at on DraftKings. This white trend line that I have drawn here was previous day's resistance. DraftKings did get some good news today. There was multiple different headlines that came up. Trading volume was up 53.4 million against a daily average of 18.3 million shares. Shares rose by around 14% after Morgan Stanley upgraded the stock. There was news on California news. There was news on Arizona for DraftKings. Just a bunch of different little headlines that kind of all trickled into this, pretty big, decent move considering where the stock came from just 2 days ago of lows of $17.41. So if we can look at that from $17 all the way up to a peak of $22.87, it's a fairly decent sized move for a stock that really hasn't been doing much of anything. A lot of small cap stocks got a little bit of a boost today. Something that we're going to need to keep an eye out on is we do have the FOMC press conference meeting notes that are about to drop in under just an hour's time here. So expect a lot of volatility if you're currently holding some longs or some shorts. Might want to think about exiting those positions if you entered into them as a short-term scalp or day trade. But if you kind of have a bigger macro plan, you're looking for a longer period of time frame, you're going to want to find those hard areas of support and resistance that you can kind of play off of. So what we're going to do here is, if we can look back just going into yesterday, in yesterday's intraday session and after hour session on DraftKings, we were having a hard time breaking through this 50-day moving average on the 1 hour time frame. This 20 period moving average was also acting as support in the after hours. And we also had the linear regression channel here at around $20 to $21 in this area. You can see previously, going back to Tuesday and even yesterday on Wednesday, the 25th, we had trouble at these areas. So you would only imagine that we were going to have trouble again at this area, at this linear regression supply. So with the Morgan Stanley upgrade, with the little pieces of news and headlines that came out, they basically said, hey, if we can't get over these levels of supply on our own, we're just going to gap over, make things easier. So we gap up this morning. We kind of consolidate sideways here going into the opening bell. If you wanted to play this long, $21 was your absolute break point here. Your profit taking zone would have been $21.67. That's a 67-cent move. Obviously, if we were to confirm $21.67, our next price target would be up here around $23.20, and we did come into a price of $22.80, so just missed it by about 40 to 50 cents. We are currently pulling back. The level of support that we're looking for on DraftKings is going to be $21.52. If DraftKings loses $21.50, then your next support is going to be all the way back down here to the gap up that we had this morning, and that price is going to be $20.36, which is still a good move considering where it came from just 2 days ago. What you really don't want to see is DraftKings to start losing $20, $19 again, because if it does start to lose $20 and $19 again, we're going to fade all the way back down here to 18 and then potentially back down here to lows if the overall market wants to go into a deeper correction. Anything under 1741 is going to be a macro trade short. You will have a minor short position between 19 and 1830, and then under 1830 down to 1740. Those are the levels that I would play. To the top side, what we want to see is this nice pullback, which is fine. It's completely healthy. So if you are playing puts on this, you might want to think about covering your put positions at around $21.50, or if we get back down to $20.35, $20.50, around that range. If we can hold this and we can bounce off, what you would be looking for is to kind of see the stock come down here to this 21.5 area, bounce around. If it cannot hold and comes down lower back into this $20 range, you want to see it bounce from here, consolidate sideways, and then start to move its way up. And this is when you're going to want to catch it anywhere between this $20.30 and $21.50 area, this zone here. So if I can kind of make this clear, any bounce in this zone is where you're going to want to get long, potentially play this stock. And obviously, if we lose this $20 range, we're going to want to exit our positions. Or if you're kind of hanging out waiting for a short position, what you want to see happen is the stock to get down here attempt to make a bounce, not be able to hold, come back down to the 20-day moving average at around $20.34, see this area get rejected, and then flush. Okay, this is the kind of play that you would be looking for, from $20 down to 19. Definitely want to clear up some of those short positions there and see what we do. Do we consolidate sideways and try to make another attempt up? If we do make an attempt up back towards $20.36 and get rejected, you can look for the washout short here through 1970 and a price target of 1837 and 1741. I know those are a lot of numbers, but that's just the way we kind of have to play the market. Just due to the volatility, just due to the significant downtrend that we've been in, just due to the interest rate hikes. We've got Russia and Ukraine news. We've got China news. We've got COVID cases still rising in some parts of the area. So there's a lot of different catalysts that are coming up here. Inflation, so much, right? So much. It's hard to keep up with everything. That's why we gotta kind of have to stay in our lanes. Just monitor the stocks that we're trading, monitor the stocks that we're playing, know our levels. So just to recap, 2316, 2350 is going to be our next resistance on DraftKings. A possible bounce at around 2155. If we lose this zone under 2155, can come down and have room to the next area of support, and that's going to be $20 to around $20.50. If DraftKings does lose $20.50, it does have room all the way back down to $18, $19. So hopefully we don't see it break 20. Best case scenario, or worst case scenario, is that we do pull back into $20. However, we hold this level, acts as a nice firm support, come back up to 2150, acts as this new support, come back up to $23, and then acts as new support before we break out higher, if that's going to be the scenario and we are going to start to curl over. So just keep an eye on those levels. You're going to have a few areas, $20, $19, $17. Those are your levels to the downside. I hope that helps. Subscribe to the channel. Also join my Discord. That link is down in the description box below. Leave me a comment. Let me know what your average order entry price is on DraftKings, and I will catch you guys all in the next video.